What's up, my beautiful black people? How is everybody today? Welcome to the Wealth Project. This is the thing that we do every Sunday at 7 p.m. The Black Wealth Project is a project where we are working to enhance the black wealth opportunity, the black wealth experience, so we can close the black wealth gap amongst black folks here in America. Today, obviously, we are talking about stock versus real estate. And so there's always a fierce debate. I've gone through many wars over this topic, whether stock is a better investment, whether real estate is a better investment. The panel, the Black Wealth team, is going to chime in and tell you what they think is the best investment and why they think it's the best investment, and even give you some tips, tricks, and opportunities to look at as we go forward. But how's the team doing today? How's everybody?
All good, man. All good.
Good.
Chill zone.
So, all right. Malik, I see you got on that African OK Player shirt.
Yeah, there you go. I had to support.
Yeah, I got the same one except for in blue and red. I wanted to get the white and red one too. I might have to get one now.
Hey, you know what? I felt good about it. My man who's African, he kind of looked at me sideways for wearing it. Like, you ain't a real African.
I'll
just say this. There's no such thing as a real African. If you claim it and you choose to claim it, then that is what you is. Nobody.
The way he turned his nose up, like, damn, you too? Frank Ugbo?
So I just want to say hello to the audience. Listen, everybody, check in, right? Let us know, what do you believe is the better investment? Is it stock? Is it real estate? What do you think is a real African? If you claim it, somebody got the that is what you is. Nobody.
The way he turned his nose up, like,
Somebody
damn, Frank Ugbo? I know it's Corey.
It's Corey.
I know it's Corey.
It's me, Black.
How many?
I don't
It
have
sounds like
anything
somebody
on
had us on two things, man. Like, who got two phones or two screens or something, man? Somebody
That's
has
not me. Oh. It a lot of stuff be my fault, but this one, no.
What would that be?
All right, so listen, this week we are doing the BOB of the week, the Black Owned Business of the Week is actually on me. So I came across this super dope platform that's run by this black guy. I'm pulling it up now. The name of the platform is Cadre. And so Cadre is this online real estate investing platform. How ironic that I find a real estate investing platform to talk about the day that we are doing stock versus real estate. So I just want to take a quick look at it because, again, anytime we have something that is being done by a black person, a black entrepreneur, a black business owner, we definitely want to big that up. And so I caught this on Instagram because they're rolling out a new program. So I can't co-sign the program, but I at least want to give acknowledgement to it. So again, it's called Cadre, and they're rolling out, it's called Cadre, and they are online real estate investment platform, kind of similar to Fundrise. And so I thought it was dope because, again, it's being done by a black man. And they're rolling out this like 3% cash management program. Again, that's very sexy because you can't get that in your banks anywhere now. I mean, I'm seeing 0.5%. I think I might have seen 1% on some short-term CDs and things like that. But this is pretty sexy. Have any of y'all heard of this before?
Yeah, I remember. I remember when they started. The one thing I would like to say is that their biggest investor is Jared Kushner. I'm just gonna leave that at that. You can take do with that whatever you want to do. But,
I didn't know that.
I'm just gonna leave that there. You know
that. Jimmy just whole plan right there.
I'm not saying no. Listen. Do with that information. Yeah. Do with that information whatever you want to do with it. That's all I'm saying.
But listen, I mean, that's one of the beautiful things about the Black Wealth Project, right? We're able to present ideas and present opportunities, and then we can look at them. Because what Jimmy just brought up actually is a great fact, and I'm glad he brought it up because I did not know that. So as we proceed on, everybody, again, tell me what you would pick, stocks or real estate. That is the topic of the night. And do us a favor. You know what? We're here every Sunday at 7 p.m. Do me a favor. Share this out. Share this out with somebody who's thinking about learning how to invest, thinking about black wealth, thinking about how to elevate themselves as it relates to black wealth, so we can all elevate together. Each one teach one, each one reach one. All right, team. So I'm gonna start off with Courtney first. Courtney, what's your pick? Real estate or stocks? Stocks. Okay. Corey, what you got?
What time frame?
At least it wasn't me. It wasn't me. I know I was gonna do that.
What time frame?
Long term.
Stocks.
All right, Jimmy.
Yo, I just want to preface this by saying I hate this question. I absolutely hate this question. I hate this question. I'm gonna say stocks.
Answer.
Stocks. I'm gonna say stocks. I hate it, but I hate it though. Stocks.
Stocks. All right, Malik.
Real estate.
He don't believe that. He converted. He just saying
No,
that.
for sure.
His name. I mean, his name is. He can't go off brand.
I know.
Really,
I know.
it don't even matter. It's real estate. For sure. It's no question. Starting out real estate.
All right, Tracy. I think we can all guess what Tracy's gonna pick. Real estate is essential.
It's real estate.
It's real estate. All right. Now, can anybody guess what I'm gonna pick? I think it's pretty clear. I think I've been pretty transparent over the years about my pick. My pick is real.
I know it's not crypto.
You know it's not what?
I know it's not crypto.
Want to stay on topic. That's not the topic of the evening. So my pick is stock.
I'm sorry.
Listen, we can do another one with crypto.
4-2. 4-2. I had my little chicken, like my little list.
All right, give us the rundown, Courtney.
Okay, 4 for stock and 2 for real estate. So the panel as a whole says stocks.
Wow, I'm actually shocked.
I feel like it's such a tricky question that people are picking stocks for a lot of different reasons that we got to get into this whole argument. Like we need to have this whole itemized conversation about barrier of entry, about number of long-term versus short-term, like startup versus non-startup. Like let's get into it.
Oh man, Tracy, you kind of hype. I don't think I've ever seen you this excited before.
Yeah, man.
All right, Jimmy, tell us why you hate this question.
Because I believe in both. I'm one of these people that don't like the argument. I believe that specifically within our community, as we talk about black wealth, we need to be involved in both spaces. I pretty much owe everything I have to real estate. Even my stock portfolio, I owe to real estate in one form or fashion. And I've been a real estate guy. It's just that as an investor, I'm speaking to myself. I'm actually lazy for the most part. So stocks allow me to be lazier than real estate does. But I understand the value in both. I understand that land will always have value. So I just hate the argument overall because I see these arguments online all the time. We spend a lot of time on the internet talking to people, and I see people go back and forth, and they get nasty when they start talking personal because they feel that strongly about one or the other. And I'm like, yo, you got to do both. Like you really have to be in both spaces. And the trick to that is a lot of folks I know who own a lot of real estate own it as paper assets, which meaning that they actually buy it on the stock market. So you still have access to owning real estate on the stock market. I just hate the question overall, but I understand for the sake of the show, we have to talk about these various points. So for the sake of the show, I'm going to say stocks because if I only had one choice, being the lazy individual I am, if I only had one choice, the good thing is I don't have one choice. So I can be in all kinds of spaces. I could buy stamps and comic books if I wanted to. But the fact of the matter is, if I only had one choice between the two choices I was given, I would say stocks. But overall, I just hate the argument.
All right, Jimmy. Corey, did you have something on this? I thought I heard you saying something.
Yeah. I mean, I'm sort of the same way Jim is. Like, I mean,
Of
people
course.
always want to. I mean, we think alike, sort of. On this topic, we think a lot alike because my thing is, land is all, like you said, land is always going to have value. People always going to need somewhere to live. People, shelter is one of the main, one of the things psychologically that people are going to need to be able to do things in other places in life. But on the other side, with stock portfolio, you don't have to touch it, and you can go in and live about your life. There's no heavy maintenance to do if you are perceptive. Like, but it's a lot less paperwork, especially in 2020. If you'd have asked me this question 20 years ago, I would have said real estate. But you asked me this question now with the new technologies involved, I gotta say stocks.
Okay. All right. So I want to check in with the audience real quick. Say hello to everybody. Let's see who we got here. Hermes, how you doing?
Yeah, what's going on?
Hey, Hermes.
Like
All
I
right.
said,
Don Johnson says stock saying down, no barrier to entry. Okay. Ziegler, Marsha, personally, it's been easier to invest in stocks than real estate. Real estate has taken longer to find the property price range I am looking for, but with stocks, I can do a fractional share and be good to go. Yep, Kushner. Yep. Now I feel bad about that. Monica Williams, say Monica, how you doing? She says, happy Sunday stocks for me. The market is at work, whether I check my portfolio or not. Real estate requires me to be involved. Heard that? Dawn DuBose,
Hey,
how are you doing? Is this your first time with us, Dawn? Tabitha Trice says stocks, you can start with a minimum amount. I have both, and real estate is no easy task. All right. Cajon says, what up, Bo? Oh, Con, no, we not straddling the fence, man. You got to pick one or the other. All right, Willa says, I'm a real estate guy because I can be hands-on manipulating things on a daily basis. It's more of a day-to-day business operation. However, I know and understand the powerful investment opportunity that is stock investment, such that I am delighted to be in a progressive investment group where I can learn and lean on the expertise of more seasoned stock investors. And with all that said, I operated properly. Real estate has the fastest upside. That's interesting. The greatest asset we have is time. And in my honest opinion, stocks provide you with the greater opportunity to maximize that asset. We got some well thought out arguments. Kelly, what's up, Kelly? How you doing? I say watch both because you can't.
Hey, Kelly.
You gotta play by the rules. You can't.
Come on, standards out here.
Hey, Katisa, how you doing?
What's going on?
Katisa,
Hey, how are you?
Kelly, we've been rocking all weekend together. Thanks for joining us, folks. All right, Dawn says yes. Okay, well, welcome. Appreciate you being here. Definitely honored that you stopped in.
Hey, Dawn.
All right, Kahan says stocks. There we go. Pick a side, make a decision.
Stocks. See, good job, Dawn.
There you go, Dawn. All right, panel. So let's jump into it here. I see Tracy is chomping at the bit. So give us your
rationale. Talk to him, Tracy.
Why do you
talk to him?
Why do you pick real estate?
Give me the biz, Tracy.
we lucky she's not in the car.
Facts, because I probably
we gonna get these bars today.
I probably would have went on my rappers battle, but so all right, here's my thought process. First of all, there's a lot of different factors that are going into right now. I believe 2020 is super, super hot with understanding certain things about stocks and technology and us moving forward into a not really a brick and mortar society and wanting to do things on the internet. So I understand why stocks is now super, super innovative and people are now getting turned on to it. But real estate has been a tried and true legacy builder in this country. The tax code benefits real estate holders, investors, owners. It has been long founded on this country's premise of brick and mortar ownership. Outside of also being able to manipulate, like I saw one of the other attendees that are on Facebook mentioned, you can manipulate your value. A lot of this with, yes, thank you, Willard. You can manipulate your value with the fastest upside because you can buy the block. You can control the comps around you. You can manipulate to change rental value as well as equity and a lot of other things that can also benefit you, not only from the tax code, but also financially from a passive, from a long-term equity standpoint, and also be able to set up long-term things like trusts, all kinds of different vehicles of purchasing property through IRAs and different things and 1031 exchanges that give you a plethora of opportunity to create a solid foundation of wealth. Now, stocks all kinds of Bitcoin, other things can be.
Wait, flag on the play. Stocks and Bitcoin not the same.
Okay, yes, no. I know that. I'm saying these other vehicles can be funded by real estate. It's always the cornerstone foundation of getting started with a solid, tried and true income producer that can fuel other flights of fancy. And I personally have a diverse portfolio where I don't just have real estate, but I have always maintained my real estate assets to make sure that I can participate in whatever the new generator is.
Okay. So I have a question for you, Tracy.
So?
You said a person can manipulate comps in the area. So are you saying one person can do that? Does it take a group to do that? How does someone manipulate the comps in the area?
I mean, it can be one person if they have time, energy, and money and resources. It can be a group of people. It can literally be buying one property or building one property in a neighborhood that has absolutely no value and systematically purchasing other lots or other properties around that property and building, rehabbing, or adding more value to those properties to now generate an entire area, which is basically anywhere between 5 to 10 properties that all can have the same value that now changes the trajectory of a neighborhood and a zip code.
Okay. Corey, I'm coming to you next. Why stocks?
Because I don't like my money tied up in bricks. I don't like having to deal with the bank to mess with my money. So when being involved in the stock market, yeah, you have to use the bank, but my money is not tied up in the bank because to get the value, I mean, you can go person to person, but it's a lot of legal paperwork and all of that kind of stuff. Like I said, if you'd have asked me this question 20 years ago, or if you'd have gave me a short term, and said, we're doing this for the short term, I would have said real estate because you can make, with less money, you can make more money quickly in real estate because most people don't understand options well enough to make money in the short term. But if you're giving me a long-term view, I'm gonna take stocks because the barrier to entry is lower and it's more about consistency than it is about degree equalizer with stocks. And so even though real estate values go up, they don't go up nearly at the same rate as the stock market does as far as building value over time. Now, that's in the aggregate. There's specific areas that the prices just shoot up, but that's part of the real estate cycle. So I'm just saying stocks because the technology has made it so much. The technology is the differentiator for me, basically, because both are great investments. But as a differentiator, I don't like my money tied up in bricks, and the technology makes it way easier to get involved and be consistent.
Okay. Courtney, coming to you next.
So stocks because there's a low barrier to entry. You can buy dollars, you can put into with Cash App, and boom, you own stock. You own either a fractional share or a whole share or whatever. Now, to Corey's point, he makes a very valid point. 20 years ago, that was not the case. 20 years ago, we were paying $30 per trade. That's cost prohibitive. But now, there's no trade cost. So it is a completely different arena, but also liquidity. I can decide that I'm going to sell my entire portfolio tomorrow and have that money in my account on Wednesday. I think that, with real estate, I mean, we can try to do it quickly, but again, I have to get another third party. I have to get a third party involved somewhere. Either it is through the person I'm selling my real estate, I'm giving it to somebody. So we have to come up with a deed. Either we write it or somebody else has to write it, but I have to take myself in Philadelphia City Hall. I have to take the City Hall and actually file my deed. I have to pay to file my deed. It's just a whole bunch of stuff that I have to get a whole bunch of different people involved to make sure that my ownership interest is protected. Also, Tracy brought up trust. You can put real estate in trust. You can put stocks in trust too, Tracy. So, that being said, also it's easy to value. I can look at my stock portfolio at any time during a trading day, and even after trading day, and say, "Oh, the value of my portfolio is X." My real estate, not so much. I usually have to get a third party to come in and actually value my property, and it also depends on the community or the area. I can have a property that's a 2.5-story property in Philadelphia in Mount Airy, and it's going to be, we'll say it's one price, but I take it right across the border into Montgomery County, and it's going to be a completely different value, usually increased because of where it is. So, again, and the property in terms of responsibility on real estate, my real estate can be taken for non-payment of taxes. The sheriff can come along and say, you know what, you didn't pay your taxes. We're going to take that thing back. You be blessed. So again, and it's an ongoing responsibility. If somebody falls down on my property, I got to pay for it.
All right. Thank you, Courtney. All right, we got to break up the stock monopoly, y'all. Malik, what you got on real estate, brother?
So it's really a difficult question, right? It depends on like at what time, like when are you beginning to invest, how much you have to invest. The reason why, from my mindset, I chose real estate over stocks, even though it wasn't really until March that I started to even pay attention to stocks. The vast majority of my net worth came from real estate. And I will say this, I do want to preempt. From what I've learned, I do like stocks better than real estate. But I'm taking the point of view from a beginning investor. And when you think of the basic human needs, we need food, we need clothing, we need shelter, right? Everybody, before they buy their first stock, they're going to pay for housing, whether that's a rental, whether they own it. So regardless of what happens, that's going to be the first thing that they pay. They're not going to be like, you know what? I know I should probably pay rent, but let me go ahead and buy. Maybe some people bought Tesla instead of paying rent last week, a couple of weeks ago. They probably do that. Some people probably did. But for the most part, people go and pay for that housing before they pay for stock. That's the first thing. 2, most of us in here are willing to leverage and get real estate with a mortgage. I don't think anybody in here is willing to get margin to buy stock. So now I could go in the city of Philadelphia.
Corey in here, right?
Right. I was like, huh?
You know Corey's in here, right?
Right. Listen.
Margin. Are you serious?
All right, let him have it.
What?
He got the floor. He got the floor. Be nice, y'all. Be nice.
We go.
Well, once again, I said most of us, some people do use margin. Let me say it like that, right? Now, and I was going to use it tomorrow. I changed my mind, right? But now, I say this. I can go out in the city of Philadelphia with our property values. I can pick somewhere. I can buy for $150,000. I can get a fixer-upper 3-unit building, maybe even storefront, with $4,500 down out of my pocket, FHA loan. It's all types of grants, sellers assist, everything else. So maybe $6,000, I can control an asset worth $145 at 30-year time period. Live in one and had a rent from the other ones cover my entire life. And use the money that I'm saving to invest in stock, should I choose to. Right? I'm not going to, yes, you can eventually get there with stock, but you're not. The very first person starting out with limited funds, if they got $6,000, they need somewhere to live for free or buy stock. I think to live for free, have tenants paying for it, is the most viable thing. Now, there's a lot of other things that have been said, tonight, but now I will even say there's one last thing because there's so much more can go on, right? Now, as someone that's real estate first, building up my portfolio of rentals is the reason why I'm able to actually have a decent portfolio in stocks, to me, after only a couple of months. If I didn't have that foundation, it would have taken me years to build a position that I was able to do in a few months because I started with real estate. Now, do I wish I had started buying stocks 10, 15 years ago? 100%. But my tenants right now are paying for my lifestyle. My tenants are paying for my portfolio, and I'm putting way more money into buying stocks than I could if I just were doing it out of pocket. And so, like I said, once again, full circle, having lump sum understanding how stocks work, I do like stocks better, but as a beginner starting out, real estate hands down. You can get to it faster.
Hands down.
Okay, so Malik, I got a question, right? So you brought up the idea of what they call now the House Act, right? To buy a duplex or a quadplex or a triplex, rent out the other units, and you live in one. But right now in the Philly, everybody that I'm talking to on the real estate side, all those multi-units are really scarce and really hard to find. So is that really a viable option now? Will it continue to be a viable option?
You're talking to the wrong people, bro.
I was about to
You're talking to the wrong people.
What?
Yeah, I got a point to make though, Kamari.
Go ahead.
One of the things about this argument, one of the reasons I hate this argument is because, again, I just want to reiterate, I think we should be doing both because historically speaking, real estate has been used as a tool of oppression. So I feel like we should be now using real estate as a tool of empowerment. Just to give a couple book recommendations, The Color of Law is a great one, as well as another one called Family Properties by Beryl Satter. They do a great job of explaining how real estate has been used as a tool of oppression. So I want to make sure that our folks, and we are on the Black Wealth Project, that our people are getting involved in that space. But the question that you pose, right? You said we have to choose one over the other. And I'm still going to have to go with the stock market because this is almost the equivalent of arguing like boxing versus MMA, right? And the reason I say that is because real estate is just one aspect of business, which means you can actually accomplish real estate ownership via the stock market. A lot of times when we talk about the stock market, we think they're these widgets or these numbers, and we don't look at them as the representation of ownership in a business. So we really want to get down to it. When we say buy stocks, we're buying ownership in businesses. This country operates on the ownership of business just as well as it does land. So there's something else that has to be said because our economy is based on how businesses run. The businesses employ people, is how we collect taxes and all of these things. So when we talk about the stock market, we have to make sure that we're looking at this as ownership of a business. And the reason I made that analogy is because you can own a real estate business, but also can own a technology business. I can sell consumer products, whatever that industry is, it's a business. And when you buy stock, you're buying ownership of that business. So that's another reason why I would choose the stock market, because I still can be involved in real estate. And I understand that the argument, that some of us are making about real estate. But Malik, if you were to study the stock market the same way you studied real estate from the beginning, you could have probably leveled up faster. When you start to understand how to write cover calls, and there's so many strategies with the stock market to make money. We were going over one on Friday about, using $7,000 to make the same thing that you would make on $100,000 tied up into a property. And that's the other part, the liquidity. So if you started studying the stock market earlier, you probably could have made the same amount of money that you made in real estate. You just started with one and then came to the other. So I do think it's possible to make the same amount of money in stocks that you do in real estate because there are so many strategies in terms of like trading options, in terms of writing cover calls. It's just so many different ways. We could sit here all night and talk about the various ways you can make money via the stock market. But I do think that as a community, we have to understand the power in owning the land beneath us. That's why I hate the argument, but I wanted to give my opinion on both sides in terms of why I still would say the stock market, because the stock market gives me the ability to, get into all of these businesses, real estate and other businesses.
All right. So, Jimmy, hold on, Malik. Jimmy, where were y'all talking about cover call strategies on Friday?
On our Friday show, the Buy the Hood Friday Live, every Friday between 7 and 8, we jump on just talk with various experts, or just me and Corey, and we talk to the community. And we were given one example of a strategy that Corey was running, and he's making about $300 a week. And it's a strategy with it costs about $7,000, but you make about $300 a week. And the comment that we were making is, well, I got a property that pays like less than that. You talk about $1,200 a month. And I'm only putting up $7,000 to make that $1,200 a month, right? But that's more of an advanced strategy. But the point being is, if you start studying stocks at a young age, which is why another thing as a community we talk about owning the land beneath us, is to expose our kids to some of this, because other communities are exposing their kids to these advanced strategies at a young age. So when you look at all the wealth that's made, just look at the Forbes list, right? And you look at the Forbes list of people that own companies and equity in companies versus real estate, it's a huge difference. Now, granted, a lot of times when they make the money in, owning companies. They go and buy the big pieces of land. They buy all the land. But the point being is, as a community, we need to expose our kids to some of this at a young age. So it's not like, hey, these are advanced strategies. They're already hip to it.
Right. All right. So I wanted to ask you this, Jimmy, right? So you brought up a great point. Real estate is used for our oppression, and it has been used for our oppression. I know both of us very much advocate the color of law. But what about this notion that Black residential real estate sellers tend to get lowballed on their properties when they're selling it, especially when they show that they're Black or ethnic or of color? Isn't that something that has kind of played against us even harder in terms of being real estate investors and real estate owners? And that question.
If we don't own our own communities, and we don't have representation in those spaces, then that will continue to happen. But that's the point of owning our own communities. When you own your own community, you can do what Tracy said, and you essentially create a market. We're marketing to each other, right? You never hear about that with other groups because they own their entire community. They own the businesses. Just as someone
own the businesses in the community.
I've seen other cultures. Exactly. I've seen other cultures. I've literally seen cultures who will overpay to be around their own people, and they create their own markets, and they do this, intentionally, right? So if something opens up within a certain neighborhood, like I'll give you an example. I was looking at properties in Yorktown, right? Yorktown has a lot of Asians moving into Yorktown, and I was looking at properties going on the market.
Jimmy, explain to everybody.
I'm sorry. So okay, so it's a small little neighborhood in North Philly, going towards Center City, but it's a small pocket. But the point I was making is, I saw properties go on the market and they were paying above asking, and then as you start to look and see who's buying the properties, it's like, and I've actually talked to someone, and they're like, "Oh, that was my cousin," right? And it was from a specific culture. They are literally moving around each other, creating this community. And they control that community because they control the land. So we're in that, right? Which is why we have to start practicing the same thing. The problem is a lot of times, right? Not trying to beat up on us, but we don't see the value in the things that we have. A running saying on this show, we need to make this a t-shirt, is stop losing grandma's house, right? We don't see the value in these things. So we don't even take the time to build that sense of community. Again, I say all the time, we don't have communities, we have neighborhoods, and it's a difference.
Okay. Courtney, you got something on that?
No, I think Jimmy's right. No, I was just agreeing with Jimmy. And I think, to the point of margin is that, with a little bit of money, you can control a lot, and more so you have the ability to do so more so than with a property. Now, again, I think was it Willard or Don? Somebody asked a really good question and said, okay, if you had $1 million in cash, what would you buy? I would buy stocks. And then I would use that money to offset my gains. I would buy real estate to offset my gains. That's what I would do, because I'm not doing this with people. but I think that's the thing. And I think to a lot of people's points, like, oh, well, why not both of them? Like, well, yeah, you use both of them because real estate is the most favorite asset in the tax code. I will say that over and over again. So I'm not going to, I'm not going to hold you. Stock is a lot easier to get into, but I think real estate actually does have some long-term benefits. And the fact that it's favored, it's going to put you in a better position. You have the 1031 exchange. So I can just keep rolling real estate over and over and over, and not pay a single dime in taxes in terms of my gain. You can't do that with stocks.
Now, Malik, you were there earlier.
Yeah. No, I wanted to just to go back with what Jimmy said, because he said my name in particular. Like, once again, like, and just what I've learned in the past couple, I do like investing in stocks more than real estate. But I'm speaking from the person that's starting out. You got to choose between somewhere to live and buying stock, whether it's rent or whatever. To me, it'll make more sense to buy that multifamily and live for free and use the rest of that money to invest in stock. And so it's really a difference of 45 days, but you control your space. I'm a huge proponent of owning where I live, even with the land taxes and everything else. I will still rather own my property than rent. That's better for me and my lifestyle. I know that rent is better for other people, and I know that there's a few millionaires that rent their place where they live and they own other places where they rent out, and it makes sense for them. But for me in my life, like owning where I live is I'm not going anywhere right now. I got these kids. I'm not whatever. This is good for me. But like I said, for somebody starting out from the bottom, but me starting from off the bottom, I understand how and I did an example of how I can make more money with stocks than my rental properties pay me. But it's more beneficial for me to do that strategy in my retirement account. I don't need the money in my retirement account, so I don't have to pay those capital gains. But from using it weekly, nah, give me that plus. And plus, I'm not saying this for anybody, but if you have rentals, you can get paid in cash. You might want that cash in the meantime.
I know exactly where you're going. The opinions of the host are those and those alone. They do not.
No. All I said is that
Kamari. I like that Courtney answered Don's question, and I was wondering what everybody else thought. Don, just to answer your question, I will probably buy a restaurant and rent them spoons. That'd be my investment move right there. But I was wondering what everybody else. At least you caught that, Kamari. At least you caught my joke. But anyway, I got you. But I wonder what everybody else says. If you ran into the million, would you stick to what you said, or would you do something different? So Malik, starting with you, because you talk about how you love real estate. That same question. If you got $1 million a day, would you go buy real estate or would you go buy stocks?
Oh, stocks, hands down. Yeah, not at all. I wouldn't even. Yes, I would. I probably would even. It's my primary. I probably wouldn't on any real estate by that 100 liquid. Yeah, I probably wouldn't own my house. Yeah, I would do stocks for sure.
See, that's interesting, right? See, Kamari, that's interesting for him to say that, even though he's the real estate guy.
Yeah, absolutely. Well, hold on. Let's check in with the folks real quick, just to keep everybody engaged and in tune. Where we at? So, Dawn, I think Dawn answered before, but again, Dawn said stocks. Hey, Tara. Tara says stocks.
Hey, Tara.
Maria says stocks.
Okay.
All right. Willard's fanboying on Tracy. He agrees with Tracy.
They real estate folks. I ain't mad at him.
Exactly. They gang.
Gang.
All right. Molly says stocks until I get my first investment property under my belt. Tell us why, Molly. Chime in with the chat with that. Tell us why. All right. Don says, from a community standpoint, real estate, I'd rather see my whole community own the floors they walk on. Okay.
That's fair.
If you had them, okay, this is the question. All right.
Rent them spoons.
Everybody answer this. Everybody didn't answer this. So Jimmy said he wants rent a spoon. Corey, what would you buy?
Man.
Should we not ask you that question, Corey? To be honest, I wouldn't buy either stocks or real estate. I would probably buy.
Come on, DraftKings.
No, I would probably buy Bitcoin. To be honest, I probably wouldn't even buy either one.
But that's not.
What did you say, Courtney?
He said, "Would you put it in one asset class?" He didn't say stocks or real estate. He said if you would put it in one asset class. I would probably put it in crypto. I probably wouldn't even put it in stocks or real estate.
Courtney, we got a bunch of rebels.
Now,
shout out to our financial rebels.
But even beyond that, though, Corey, the one problem with that is you said Bitcoin specifically, right? So the problem with taking the million and putting in Bitcoin,
I probably wouldn't put it directly into Bitcoin. I would probably put it in crypto though. I wouldn't buy $1 million.
All right.
I would put it in.
So crypto. You knew what I was about to say.
Yeah, because
the reason I say this is because now you're not getting no cash flow. You need cash flow.
Yeah. No. I would put it in. I would definitely put it in crypto, but I wouldn't put it in Bitcoin.
Malik, did you get it? This?
He said stocks.
Did I get it?
Yeah, he said stocks.
Okay, I didn't hear him. Tracy, you got $1 million. Real estate, does it swell you?
I'm definitely still buying real estate, and I probably will buy another city in next to Akon's
Senegal.
City in Senegal.
Okay, that's dope. That's dope. Listen,
a new ecosystem, a new economy, all of that. It all starts with the land.
We out.
Yeah. I mean, listen, our investment dollars can go a long way.
I get to buy all my goods. I get to buy all my goods in crypto. That's great.
You can actually, yep, and that's a place for that.
All right, so let's keep it going. So Molly said, great point. Don't forget to chime in on your rationale why, Molly. That's a great argument for the real estate side. Yeah, real estate side is coming on hard. Marvin Nurse Aiken Man says, so we have more investment leverage using real estate as the vehicle, but diversify at some point and include stocks. Well, technically you don't. You can actually get just as much. Actually, you could probably get more leverage with the stock market.
Yeah, you can get dollar for dollar. You can get dollar for dollar in the stock market if you want.
And you can get it. And you can get it a lot quicker than you can with real estate.
Also more dangerous.
Also, it doesn't judge your credit score, so your credit score isn't really a factor in that. So Maria says, I was in Philadelphia. You may be able to find a 3,000 square foot for $150K in my area. So duplex, you talking about, Maria?
3,000 square feet could be any damn thing.
Yeah.
Right.
Yeah.
So Kelly, all right, Kelly, you still ain't tell us what you want to pick, stock or real estate. I ain't forget you. I see you. All right, Don Johnson, depending on my age and retirement goals, I would choose stocks. If I'm in my 60s, I would choose real estate, purchasing, rehabbing, flipping, and also owning a few for rental income. Okay.
So you know what? I just had that conversation with someone earlier. We actually came up with the opposite, that somebody older should actually purchase stocks. And this is the reason why, is that as you get older, it's actually harder to maintain your real estate.
Yep.
And we were having that whole, and that's honestly where I see when I was running the sheriff's office for the city of Philadelphia. That's where I saw people have the most problems, is that they got older, the property, something went wrong with the property. They weren't actually able to maintain it. The repair became a lot bigger because it wasn't taken care of quickly or in a timely manner. They didn't have property managers that would take care of that for them normally. So it was kind of like the calamity of errors. But I noticed that, and when I work with clients, a lot of them will actually start winding out of their real estate as they get older, and they put it into dividend stocks, or they may do
dividend paying stocks.
Yeah, like that.
Yeah,
so
that's what I did for my mom. We had some real estate. I sold the real estate, put it in the dividend paying stocks. She get a check every month.
Yep.
Smart.
So, as a family of legacy real estate holders, there was a plan pretty much put together for acquiring as much property as could be done at a certain dollar amount in a certain time period, paying down any debt that was used to generate those doors, and then utilizing property managers and other percentages of property maintenance requirements that were needed to make sure that they could still be maintained in perpetuity under a large conglomerate like a trust or a large LLC family ownership. So it was already put in the plan of maintenance as the seniors in the family got older and could no longer be hands-on. So to me, your real estate portfolio has to have a longevity plan.
Yeah, a succession plan. It has to have a succession plan.
It does.
That's
absolutely.
amazing.
I don't believe in buying property short term and just utilizing the equity in it, or taking it out and utilizing it and not having a long-term plan for it. Anything that we bought, even if it was in the 80s, we've done our best to keep it unless it just financially didn't make sense.
Gotcha. All right,
y'all gangsters over there. That's why you always going to choose real estate, because y'all had the plan in place.
Absolutely.
Right.
So,
so Mr. Edwards said yes, real estate as empowerment. I'm sorry, what's going on, Courtney?
I want to add something. So stocks have their own, because stocks are usually held in most cases in a beneficiary account. So not only do they go outside of probate, typically, unless there's some kind of wrinkle, but they have their own succession plan built into them because they have the beneficiary designation.
They do.
Yeah.
Well, thank you for that bit of information.
Yes, coming through with the benefits of stock ownership. I love it. All right, so Missy Edwards says yes, real estate as empowerment. Marvin says great point. Of course, Willard's going to say great point on real estate. Malik, Willard just I
love Willard, man.
Willard's my bro. Don't get me wrong, Willard's my bro. Real estate in other areas are not as easy as Philadelphia. 150K would probably give me about 3K of land in my city. What's your city, Maria? By the way, everybody check in. Where y'all watching from? Where y'all joining us from?
Man, listen, the only place in America where the plan doesn't work, New York and Chicago, and maybe even Boston. But
and
otherwise, The Gold Coast. Yeah, that whole California.
I was getting ready to say it. You said it before me, Kamar. I'm about to say, okay, go to the Bay with that. Go to the Bay with that talk.
Yeah, you go to the Bay with 150K.
So
You're gonna get a 2 square lot.
So Courtney Old says, as a complete newbie to both stocks and real estate, I really appreciate this discussion. You guys are bringing up invaluable points. Thank you. And that's why
Courtney. Love you, girl.
We both actually all believe in stocks and real estate. We actually all believe in wealth building, period. I mean, I know I'm speaking for everybody, but we believe in get it where you get it, right? Wherever your inclination is, whatever your passion is, wherever you have your own personal leverage, that's how you get it. And then you can go ahead and do whatever you want to do. But Willard clearly is a real estate guy. I know that. Willard has even introduced me to some other real estate people here in the city. Malik's a real estate guy. Jimmy technically is a real estate guy, even though I kind of forced him to say stocks. He didn't want to say stocks. He wanted to say real estate, right? Courtney is a whole real estate attorney. So, we all are involved with real estate. Most of my clients are real estate. So we all believe in it. It just depends on the circumstance, right? And again, we always say there are no cookie cutter solutions. Everybody needs their own plan. But, we wanted to have some fun too. So we figured this would be a great way to have fun. So we appreciate you joining us, Courtney. Courtney, is this your first time joining with us? All right. So Don says facts. Try and buy real estate in Chinatown. It ain't happening.
It ain't happening, Captain. That ain't happening.
Okay. Willard says, I think of this difference may lie in personality. Absolutely. Personally, I like real estate because I love the entire process of buying, design, renovating, selling. It's more fun for me. I find stock investing a bit boring. Right. Yeah. Willard want to like business. So Willard,
that's the part about stocks I like. It's boring.
Right. Not putting Willard's business out there, even though I saw him talk about some stuff, right? But Willard's actually hands-on. He's swinging a hammer. He's drawing blueprints. He's engaging with the engineers and architects. So it suits him. What we have to do is not follow Willard just because Willard's doing that and it makes it look fun and sexy, but do something that you actually have a true like or love, or at least an advantage in.
Agreed.
And Willard has an amazing story, by the way. I just want to put out there, Willard himself has an amazing story, and he will be on the By the Hood podcast in 2 weeks telling his whole story. But I just want to put that out there.
I might try to grab Willard first.
He's already done it. We already shot it. It's done already. It's just coming out.
I might drop it first though. Let me grab him.
Oh, that's dirty. That's dirty.
I'm just playing, y'all. I'm just playing. So Willard says, Jimmy, I flipped the house in Yorktown in 2015. Bought for $70K, flipped for 170. That property is now valued at 250. And so when Jimmy brought up Yorktown is actually an area around Temple University that is getting hit really hard with gentrification. Yep. And I thought that was a really big point to bring up because that's why you're seeing these homes starting to flip the way they are now.
Yep, correct.
He said it was bought in cash by Asians. Those projects looking homes that were once owned by Temple University off Temple CC Moore.
I know
they were paying cash, and they were offering over asking because they're building their little community out there. And I mean, it's amazing to see. And instead of getting mad, I'm like, why aren't we doing the same thing? You know what I mean? I don't get mad at it. I'm like, we should be doing this.
Correct.
So Ziegler Marsha says, a mill today, I would switch to real estate primarily and stock secondary. Tell us why. Give us your rationale. Malik says, I see the benefits of brick and mortar. So Malik, I'm assuming you're responding to my response to your question where you said you would do stocks first until you bought your first piece of property. All right, rented spoons. It's not rented spoons though. It's renter. It's renter. Can't forget the ebonics, y'all. This is interesting. Malik says owning land is not only an American dream, but the link to our history in this country.
Correct.
I don't know about. I mean, history in this country. We were the stock, but I don't want to dig too deep into that.
We were working the land. Well, I believe that's his point. We were working the land.
Yeah.
Yeah,
we're working the land, but we were the stock. The exchange was us being traded. We were the
land. We were the business.
We were chattel. That's what we were.
Pretty much.
We were chattel.
That's right. Reynolds spoons. All right, Kelly. Thank you for that. Stocks. I appreciate you. Take a side. But actually, Kelly does a lot of stuff in real estate as well. So Kelly, I guess you're not feeling that. All right. So Kahan
That's
says
interesting too, though. That's
what are you saying, Jimmy?
No, I'm saying that's an interesting point that a lot of us who actually work in real estate or have a background in real estate are still choosing stocks. I just think that's interesting.
I think it's a natural progression and a natural transition, but I just feel like everybody understands that the reason why you're able to move so freely in stocks is because of the foundation and the grit that y'all had with building up the real estate.
So I think there's a different reason why. I think your reason why is real too. But the government put in place a massive home buying program around the 1920s to combat quote unquote communism. And so many times we buy real estate based on some of the branding and marketing that we've been exposed to. But I ain't trying to go too deep.
Correct.
So Dawn says, never looked at it that way. I was thinking paying in full for my purchases that I kept in place and trust for my heirs. But here's something, and Courtney, I want you to talk about this. Hold on, I'm teeing it up for you.
Okay.
Dawn, do your heirs want to be bothered with real estate? So go ahead, Courtney. I know you got something to say on this because we talk about it all the time.
We actually talked. I actually talked about this. It wasn't this particular issue. Actually, I think a trust would have actually saved this particular issue. But we talked about. I think a lot of people decide they want to leave stuff to their kids. But to Kamari's point, it's like, do they want it? Do they want to be bothered? Now, if you have it in trust, you typically have a trustee. We hopefully that it's a third party outside of your family that's managing it. But guess what? They come with a cost. There's a cost. Like if you have somebody, managing stuff, you want to pay them. So the question is that, I tell people all the time, sit down with a professional, a real estate professional, stock market, I don't care, but just make sure that plan makes sense. Even if you're paying it off in full, you still have the obligation of paying the property taxes every single year. And a lot of times what ends up happening is that what happens with real estate, typically it goes up over time. What also goes up over time? Property taxes. So just keep that in mind. There was a story floating around on Twitter, and I don't know if the team has seen this or not, is that a young lady, I think she had over 100 doors that were left to her by her grandfather. And
I saw this.
Over time, she actually lost all but about 5. Now, again, like I said, this particular instance probably would have been helped by a trust, but I actually don't have enough information to make that final conclusion. But again, is that the thing is that real estate actually requires you to know kind of what you're doing. And because of that, if you do not know what you're doing, you can actually easily lose it. So I think I think putting something in trust is good. But I think it's also a function of, do the kids really want it? Because at the end of the day, I always give people the opportunity, if the beneficiaries get together, they have the ability to disband the trust and sell the assets and disband the trust and distribute it to the beneficiaries. So again, I just think it's worth having a conversation. It doesn't really work for everybody, but I think regardless of the situation, you have to own something.
Absolutely.
Right.
Kamari, that story.
Hold on, Jimmy. I
dropped a pic of it in the group.
Hold on, Jimmy. Go ahead, Malik.
So no, what I was saying in response to what Courtney was saying is you are 100% right. Because like a property that I bought a few years ago, a woman told me for years that she didn't want to sell it. The house had fire damage, but she was leaving it to her granddaughter. When I asked how old she was, the granddaughter was like 12. And I asked her, like, would your granddaughter rather have a burnt out shell or $100,000? Mm-hmm. And I think that point kind of resonated with her, because like, what is this 12-year-old girl going to do with a burnt out shell? And she probably lose it to taxes eventually, or sell it for pennies instead of taking $100,000 right now for that shell. And so that was the best thing for them in that moment. Because the lady, I mean, she makes it be around, I don't know, but still, that 100% is the case. But also to Courtney's point, it definitely takes know-how to understand these stocks, because as we all know, what a lot of people do is they buy at the high and they sell at the low from the emotion. Like how many people ran just a few weeks ago and bought Apple and Tesla at the split and then sold their stock 2 weeks later when it started to fall? Like that is also human nature. So you could really get hurt both ways by not really understanding either one. You got to have a good understanding, and the person, like the beneficiary, they do have to have some involvement on both sides, you know. And matter of fact, one of my friends lost almost everything that their dad left to him. The mom, it was a stock market, but I don't know what happened, what they had, but it just dwindled away over decades. Nobody looking at it, and then when he finally took control of it, it was almost nothing left of his entire $100,000 portfolio from 1992. You know, it happens.
So Jimmy, you had something.
No, one quick thing to his point though. That's one of the reasons why, if you ever read like Warren Buffett's plan, is to leave most of it just in the S&P and let it go, because that way it'll pay his family dividends. There's nothing to look at. It's self-cleansing. So there's ways around that. But I was just letting you know, Kamari, within our group, I just put the picture of the story Courtney was telling when the lady was saying about how she was left all these properties, and because not understanding what it was, they're gone.
So it's in the group or our chat?
Yeah, it's in our chat. It's in our group chat, and it's a picture. But she explains like, you know, what they had and what they're left with.
Okay, so give me 1 second, and I will pull that up on the screen. Just
okay.
2 shakes, because I think that's a really good point, right? I mean, I hear a lot of people talk about wanting to leave things to their heirs, rightfully so, right? We have to be generational minded. We have to be legacy minded, but we don't want to do more damage than actually good. And that's what Courtney was basically breaking down to us all.
Agreed. I feel like at the minimum, whether it's real estate or stocks, you have to do your research. You have to make sure that you're engaging professionals and that you're actually understanding where your money is going, how it's working for you, and what the benefits are long term. You can get burnt and you can get hurt either way, right. But the best way to be able to combat any of that is education.
Yep.
And you have to engage your kids. Like, I think it really burns my butt when I hear people talk about, oh, I'm leaving this for my kids. I'm like, your kids know that this is being left to them? Do they have any idea how any of this works at all?
Agreed.
And it's so maddening, because it's like, again, you're setting them up for failure because of the cultural bias we have about secrecy and silence.
Agreed.
Absolutely. But let's look at this. Let's look at this real quick, folks. So this is from Portia's Porsche. Update that my family grandpa actually died at age 78. God bless him. He left them 110 doors, 84 single family houses, 16 apartment complexes, no mortgages, no liens. Left to the granddaughter. They had 5 properties left, all back taxes. This is insane. So somebody speak to this, like this particular situation, because it's always great to have specific situations to kind of go through.
Mm-hmm. So one thing I'm going to say to people is this, especially our people, whenever you have inheritance, especially when it comes to real estate, the first thing you want to do once you actually get those deeds transferred, or if you're at the will and the estate probate and you find out that you're getting these properties, you need to be consulting a professional. You need to be talking to accountants, CPAs, real estate professionals, and real estate attorneys, because they can help you understand exactly what it is that you just got dropped in your lap. And if there are any delinquencies or dilapidated properties or deferred maintenance, there can literally, between that group of people, help you create a plan to be able to maintain that wealth. Because that kind of information, that breaks my heart for people who are in our community, who are gifted this leg up in this society, and they have no idea that they were just given gems.
Absolutely. So everybody, every Sunday we do the Black Wealth Project. Listen, the reason why we do the Black Project is for this reason exactly, right? We see there's a lot of misinformation floating around in our community, a lot of overnight social media gurus, real estate gurus, stock gurus. And so we come together and we form like Voltron. If y'all don't remember Voltron, I might be dating myself, but basically we collectively come together and we share our knowledge with the community. Not looking for anything. We just want the community to be in a better position to be able to do more and leave more to future generations. So do me a favor, do us a favor, share this out, because the more we share this information, the more the community becomes empowered to make better decisions with their money, their investments, and their assets overall. All right, every Sunday at 7 p.m. So, Courtney, what do you? I mean, you just brought this up, but would you have done anything differently with it?
Lots of things differently. So the first thing, so Tracy kind of even got ahead of us. One of the things that I have noticed, and I actually saw a very similar situation like this happen in Philadelphia. It's not as many doors, but it actually did happen. One of the things that I have noticed is that we do not have a listing of all the properties we own. That is the very minimum. Is that, and what I've also noticed is that a lot of people, even back in the day, had these properties in some type of business entity, whether it's an LLC or some type of unincorporated association, whatever. So again, you may be able to, and Philadelphia actually doesn't allow this anymore, but you may be able to search for a person's properties by their name. But if they have it in XYZ LLC, you may not know what the name of that is. So you don't even know to look for it. So the biggest thing is that you need to catalog all of your properties, every single one of them. Catalog your deeds, and then also any liens or encumbrances, which are typically a mortgage. Have that all together. Okay. Then you need to go run to an estate attorney and have them talk you through whatever's going on in your particular situation. Here, I probably would have done, it depends. And there's a couple different things. Depends on somebody's temperament. I would either put all the properties in one trust, boom, and then put a third party manager as a trustee, and then had a property manager that actually managed the properties. That's what I probably would have done. However, if grandpa was like, you're not doing that to my property, boop, 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 then I said, okay, solid. What we'll do is we will do a will, and we will do a testamentary trust and list out all of the properties and actually make sure that they do what's called pour over into the testamentary trust. So therefore, it's actually now it's held where I wanted it to be before, but they also, but it also just puts everybody in a better spot. Same situation. So I would do a trust either way. So at least you have one central repository with all the information there. Because again, is that we have the secrecy, we don't like to talk about money, and then ultimately we end up losing the asset, and that's the thing that's the most frustrating. And like I said, I've seen this in Philadelphia. I've seen it. It was a woman she moved to New York. Her father had properties here, and then she started getting calls from attorneys, basically getting in touch with her as the heir of these properties. By the time she got to it, what happened? They were sold at sheriff's sale. And the thing is that, she's now possibly entitled to excess proceeds if they are them. But she actually had a whole property that was conveyed to her, or that actually she was entitled to because the person died without a will. So again, get that will, have a conversation with a estate attorney that actually understands real estate and actually understands assets. And I'm going to leave that at that.
Gotcha.
Kamari, just real quick in terms of what I've seen in the marketplace. I've seen a lot of grandmothers and grandfathers doing the right thing, buying properties, owning a bunch of properties, and they end up leaving them to like 4 or 5 grandkids. I see this all the time. One of the grandkids doesn't live here, doesn't care about anything that's going on. One of them is living rent free, so they don't want to sell. The other one wants to sell, has their own property, and nothing ever happens, and they end up losing the property. I see this all the time where instead of having a plan, they just leave it to however many heirs they have. I have 3 kids. I leave it to all 3 of my kids, and they can never agree on what to do. So they end up not having anything. And we talk a lot about building wealth, but along this process of teaching our folks to build wealth, the wealth that we have to make sure that we're holding on to it.
We got to protect it.
That's right. Absolutely.
And part of protecting it is educating yourselves on how to keep it for perpetuity. Sometimes it's not your child. It's not your grandchild. That is not a succession plan if the child has shown no interest in real estate or no interest in being responsible for anything other than their personal interest. So you might have to step outside of your familial box and actually go to professionals who do this for an entire career to be able to maintain a plan that will be able to take care of your family forever.
Good point. All right, so Mally's chiming in from Delaware. Ziegler Marcia says this conversation is so fire. She gave us 2 firebombs. I'm blessed to have stumbled across this live. So listen, like the page, like the YouTube channel, follow us on IG, follow us on Twitter, Stay connected and plugged in with us because we are dedicated to doing this, and we'll be back every week, if not more. All right. So Maria Shakes is in Boston. Courtney's in Hampton, VA. All right. Angela's in Tallahassee.
Okay.
Gang.
Nice.
All right, Alabama. Okay.
Hey, what part? I just came from there.
Khan says Tracy's making real estate succession plans, a service you provide to whoever needs it at cost. Yeah, I like that.
Hey,
I mean,
here you go. Let's get it.
Yeah, I do those consultings on the side. There is a minimum level of entry though, so we would have to discuss it because we can't do it on one house.
Okay. I think it's really interesting, right? I'm when I was doing financial planning, financial advising, I met a guy who was pretty prominent estate planner. And he says, you know, everybody's kind of programmed to separate assets after, you know, the big breadwinner dies and they give it to the heirs. But they said the real key to wealth is figuring out how to keep those assets together, if possible. If possible, right? And Courtney made that point. But if you can keep the assets together, you have more buying power. You have more leverage. You have more leverage when it comes to getting repairs and other things done. You have more opportunities at bay as well. A lot of times, you know, Jimmy talks about us not having a good quality of Black love or love. I believe, right, the issue he was talking about was in general. But I believe we have to really, really double down on that because it really, really will help our community exponentially if we really start practicing that and mixing it in.
Everybody can't be
our wealth pursuit. Go ahead,
everybody
Jimmy.
can't be the chief either. I was about to say everybody can't be the chief in that situation.
No, I mean, we got to learn to play our roles. And that's what everything. And I think here's the thing, right? And to be totally honest, I think we all can be chiefs in our lane. And at times we can be chiefs to lead a certain thing. But, you know, you got to be qualified to do it also. And that's something we don't talk about a lot.
Correct.
Yeah.
Right.
Correct. Right.
Okay, Cal.
Okay, Callie in the house.
Rancho. Is that Rancho Cucamonga?
Rancho Cucamonga.
No more
I've
knock doors.
always heard that name.
Yeah, about that.
Is that a real place? It just sounds so magical.
Sounds like the weather's amazing there.
Yeah, like all right. So, all right. Checking in from LV from Vegas. New Orleans. So we national, y'all. We actually are international.
Nice.
We have someone chimed in from time to time from South Africa as well.
Yeah.
New Orleans.
All right. Sean says, I appreciate you all. Thank you for sharing your knowledge. Thank you, sir.
Welcome.
Thank you, bro.
Another great show. Y'all. Coming. We will. We dedicated to this, y'all. South Jersey with Philly born.
Okay.
Oh, we got some Durham folks in here.
Yay.
Okay.
How they found us?
Yeah, teaching them early is the importance. But I think, you know, teaching is exposure is part of the teaching process. And so a lot of times our family don't even know what we do because some of them aren't interested for whatever reason, but trying to get them involved. You know, a lot of times people won't get involved until they listen to that famous radio station, WFIM, What's in It for Me. So, you know, it can be
Show your kids what you do. If you make money, make sure they understand how you make your money in the event that they need to duplicate it.
All right, shout out to Connecticut.
Okay, Connecticut.
This
Peace,
thing
Connecticut.
jumped on me again, y'all. A whole bunch of comments rolled in and I didn't see them come in. So I'm gonna try to get to all of them as we begin to wrap up the show. I did see a question. Someone asked, is it better to transfer property before you pass? I'm trying to find it now.
You want to take that like court?
It depends. So here's the thing. You have what's called stepped up basis. And you only get stepped up basis when somebody dies. So here we go. All right. I'll give you a real life example because I have one. So property purchased in 1958, $8,000, right? Property right now, we'll say is like $200,000. Okay. All right. So we have $200,000. So you have a gain of $192,000, right? Okay. All right. So if the person who owns the property is still living, because they were 1958, a long time ago, if they convey it to one of their family members while they're still living, they get what's called the fair market value at the time of the transfer. So they basically, no, that's not true. They get the fair market, they get the value of what it was purchased for. So they basically get basis of $8,000. So if they sell it, they have to pay tax on the $192,000 gain. However, if they die, then they get the fair market value at the time of death. So they get the benefit of this $192,000 in gain goes away. Poof. Okay, that's stepped up basis. So I share that to say, it depends on the situation. So a lot of times is that if you have a loved one, and this is not legal advice, don't say, Courtney told me to do it. No, I didn't. But this is an example. So a lot of times people will say, grandma, grandpa, whoever is sickly. However, if they go into a nursing home, they're going to attach this asset. So some people say, you know what, we may have some time on our hands and we may be able to convey it before that time period kind of kicks in. Fine. But it really just depends. It honest to goodness, you guys, depends. This is why you have to get involved with a couple of different, you have to get involved with a state attorney or elder law attorney. You need to get involved with a real estate professional that actually knows what you're doing in that area, because depending on the area, they may say, well, this is a better option than this. So everybody has to be on the same page with these things. So it really, really depends. I personally am a fan of stepped up basis if you can do it and you have an asset where you have such a large gain, like $192,000. But it just really depends. So you involve other people, you can't just kind of go about your own way. You can always have your own ideas, but you have to vet them against the professionals. So let me clarify. I love saying that. Have your own ideas, have an idea of what you want it to look like, but you have to vet it against the professionals to make sure it makes sense. Because I see a lot of people say, yeah, I'm going to split this property between 3 people. That's a disaster. Do not do that. If one person decided you want to sell it, I don't care. But when you sell it between 3 people, invariably something is going to go wrong. It's like a group project. Somebody's going to do all the work and some people are not going to do anything. So to prevent all of that, come up with a better way of dealing with the asset.
Correct.
Courtney dropping gems.
Bars.
Shout out to Massachusetts. We got Don's question. Marvin said, this is exactly why we have to include our heirs while we are here learning. Mm-hmm. Absolutely. Willard says, taking over 100 doors of real estate with no experience is a train wreck to come for sure. The learning curve is too great. This is the downside of real estate inherited. We have to educate our children in the game.
Facts.
Amen to that. All right, so just catching up with everyone. Listen, I have a podcast that I really like. It's called $1 Million Worth of Game. But listen, I think we gave you $1 billion worth of game today, and we typically probably are on a scale of somewhere between 500,000 to $1 billion every episode anyway. So just call us the $1 billion team. Put it in the chat. Do me a favor, put it in the chat. Call us the $1 billion team. All right, so Spring says, this is my first time catching y'all.
Hey, Spring.
My last time. Excellent.
Nice.
Thank you for joining us. Angela says, I appreciate the Black Boy Project for sharing these informational, powerful gems and nuggets. Well, we appreciate you, and we appreciate if you share us with all your friends and family so we can make sure everybody can kind of spread and share the wealth, and they can get some of these gems that we drop.
Correct.
What is the name of the form to be added to a deed to avoid the home being taken if a person is ill?
No form, an attorney.
Yeah, I'm going to say. No.
Attorney. Okay.
That's no form, attorney.
All right, there it is, y'all. We the $1 billion team. Thank you, Mr.
Oh, let's go.
$1 billion team, boom.
Let's go.
The $1 billion team for the win, y'all.
Ready. So,
listen, as we wrap up here, does anybody on the team have anything they're working on that they want to let the audience know about?
I'm trying to move to Belize and spend Bitcoin for the rest of my life. So $COREYCAMP. Anything that goes to that account goes to Bitcoin. That's the Bitcoin succession plan for me. That's my Bitcoin retirement plan.
I hope you have that listed in your will, so all your heirs and your family can get access to that money. God forbid.
I don't need I don't need a will. I got it on a stick. Yeah, I got it on a thumb drive. I got a thumb drive and and I got the codes to it. That's all they need.
Hey, listen, man, don't put that on video. Don't put that on video. Don't put that on video. Keep that quiet.
My fault.
Keep that quiet. You know what I'm saying? But yo, I just want to say, Corey and I have another book coming out within the next 2 months. It's called Hard Work is for Suckers. But in the meantime, we are, got a couple other books out.
Shout out to the Bronx Tale.
You know what I'm saying? Sports the Book. And also On Your Time and Space. I already got 2 of them out. Go to onyourtimeandspace.com or sportsthebook.com if you want to support both and see what our literature looks like. You know what I'm saying? Because it's meant for certain type of individual that can understand our language, although it does come with a glossary. But be on the lookout for our new book coming out, Hard Work is for Suckers.
Okay. All right. Thank you for that, Jimmy. Anybody have anything else they want to share with the audience?
Yeah, I do want to recognize you for repping Jackson State. I just peeped at it a little minute ago.
Yeah, that's fire. That's fire.
Well, tell them why it's fire, Malik, because I don't think people really understand. They might have forgotten already.
Jackson State. Well, listen, so you know, those who don't know, Jackson State is the HBCU in Jackson, Mississippi. The legendary primetime Deion Sanders is the new head coach of the football team. That's going to bring a lot of attention in the HBCUs, man. I know few folk went to Jackson State, like everybody's so excited, man. So listen, anybody, I know that Jackson State, Alcorn State game, I might even travel down and see something to see that one. That's going to be a monster. But no, Jackson State, man, like the Deion Sanders is going to bring a lot of attention to HBCUs with that move, man. So shout out to Prom for that.
And I mean, part of the reason, and I'll be honest, like Jimmy's a big sports fan. Sounds like Malik's a big sports fan. I'm not sure about Corey and the ladies. I'm not really a big sports fan, y'all. But what I do love about that whole initiative that he started was not only did they recruit him, he brought other black athletes with him. He brought Terrell Owens, as y'all know, he played with Philadelphia Eagles.
Wait, stop. Don't. That's
That's not true.
Yeah,
that was a rumor. That part was a rumor.
Oh, that was a rumor?
That was all rumor.
Yeah, his staff hasn't really been put out there yet, but that was a rumor. He said that was a rumor. But I do want to say the hoodie is fire. I'm mad I ain't think about that first, but salute to you because that's a dope hoodie.
Great minds think alike. Save it for the meme battle, baby. Oh, by the way, I you know what, y'all gotta blame me, right? I've been doing a bad job of doing our meme battle. Because these last couple of weeks, I've been really putting the fire and putting this work in.
I mean, it's no sense of doing it no more. The streets told you. I mean, the streets told you. Listen, just go read the comments on ours. Like people are saying that we have the best page on IG. You know what I'm saying? They're saying that our IG page is the best page. Period. They're saying that I'm the mean. Like so I'm not even really gonna argue with you no more. I mean, you know, it is what it is. But you have been doing a good job, though. I'm very proud of you, though. You've been really putting forth a great effort.
I'm
serious. You have been, though. You've been doing a great job.
I want to register this for everybody to know. I want to submit this as evidence, right? When I battle Jimmy, I don't just battle Jimmy. I have to battle Jimmy and Corey. For the record, I get double teamed all the time, y'all.
No, you did a great job, fam. You did a great job. You really are doing a good job, though, man. You stepped your game. I appreciate it, man. But listen,
right? It was like they was doing a pre-written freestyle, and Corey was right behind him, like, "Yeah, drop them bars, spit that flow." So it's all good.
Don DeMarco, listen. To Don's point, support all black content creators. Support all black content creators. Everybody.
Correct.
You know, I saw Don do that last week, and I was mad that I didn't get a chance to put that up. But Don's right. Mm-hmm. We have to support all our black content creators. Us, EYL, anybody else. I can't think of
Black Wealth Renaissance. It's a gang. It's a gang of them.
It's a ton of them. It's enough black content creators in this space that like I don't even find myself going outside of like, you know, it's enough of us doing it that this is what I consume now. I consume our own people, which is a beautiful thing. What a time to be alive that we have this many people in this space. So support all black content creators.
All right. Well, thank you for that, Don. And Jimmy, you're 1,000% correct. So listen, folks, it's been great hanging out with y'all. I appreciate y'all. I'm honored that you guys come back every week, week in and week out. And I'm glad that you all have donned us as the $1 billion team. All right. So we want to continue to keep putting out this $1 billion worth of game. We'll see you next week at 7 p.m. sharp. Be here, be square. Have a great night, everybody.
Good night.
Peace.